YouTubers, Mike Martins here with the Mike Martins channel. The water's starting to rise. Insolvency business booms in Canada amid rate hikes. Guys, I know I've said this before many times on my channel. I think there needs to be another rate for small businesses because small businesses are the backbone of our economy. The small businesses is what funds the public sector. All these government jobs that are being created, well, they're creating through private sector jobs. I think there should be some sort of a special interest rate for small businesses in Canada. I'm not talking about nail salons and like companies that launder money and stuff. I'm talking about like real businesses, like they come into, like, people want to, like myself. Look, I'm an entrepreneur. I own my small business for many years now. I've been an entrepreneur. Most of my life, half of my life, I've been an entrepreneur. So, here's the deal. There should be some sort of rate difference between small businesses and people that borrow to buy $1 million bungalows. So there needs to be some sort of a divide because it's not the small businesses' fault that people are spending more money on a house than they should be. And it shouldn't be the small businesses' fault. So anyways, this is from BNN Bloomberg. It was sent to me by Steve the Plumber, one of our regulars on the show. The water is starting to rise. Insolvency business booms in Canada amid rate hikes. Okay. People who made a living guiding others through bankruptcy in Canada say they've never been busier. Record debt burdens, rising borrowers' cost, and in some cases, bigger payday loans are driving many Canadians to seek relief. According to several licensed insolvency trustees who spoke to Bloomberg, they say November was the busiest on record and December, typically a slow time of year for insolvency trade, hasn't let up. So why is it a slow time? Because if you're in the retail sector, like such as myself, it's actually busy. So you don't have time to, you're making money, right? But it's supposed to be a slow time of year to file for insolvencies, but it's going up. It's actually the reverse. I'm essentially trying to add capacity to every day to get people seen. Blair Manton, a Vancouver-based licensed insolvency trustee at Sands Associates, said by phone, "Usually things slow down around Christmas, but we haven't seen the demand slow down this year." Oh no. The interview was anecdotal, and recent indications rate hikes are beginning to take a toll and suggest insolvencies may keep rising. The latest official data from the Office of the Superintendent of Bankruptcy showed that the rate of consumer insolvencies rose 9.4% in October on an annual basis, the most since 2016. Insolvency data can be volatile, but it appears Canadian consumers are in an inflection point. Yeah, inflection point. The tide has turned and the water's starting to rise, says Tim Michaelos, a licensed insolvency trustee at Hoyas. Michaelos, an associate Inc., said on a phone interview, "Now it's just a question of how quickly does it rise." So here's a little bit related topics that are slightly off topic, but Toronto and Vancouver most vulnerable to rate hikes, says CMHC. A risk of 2019 recession higher than a lot of people think, says Rosenberg. And then sudden housing market prediction in BC through 2021, Central One Credit Union. So a lot of the housing experts or gurus have had to reiterate the value of housing for going into 2019. So they've had to reiterate it 3 times now. They said it was going to be a decent stagnant. Now they're saying it's going to be a little bit of a loss. Now they're saying it's going to be a little bit of more turbulence. So they have to reiterate everything they're saying every couple of days going into 2019, because if this massive perfect storm we're headed towards, interest rates going up, people over-leveraged, people bought houses they couldn't afford, people bought cars they couldn't afford, people used their homes as debit machines. it's out of control. Luckily, I stayed humble. I paid my bills. I saved for a down payment, and I decided I wasn't going to pay $2.4 million for a bungalow in Vancouver. So I left the city and bought a house for $260,000. That's... Watch my video series on Living the Dream, and you'll see. The effects of higher borrowing costs beginning to be felt broadly. Vehicle sales, among the sectors most sensitive to rising rates, fell the most in 2009, while the growth of residential mortgages decelerated to the slowest pace since 1982. Worrying signs for an economy so reliant on consumption. That's the problem right there. In addition, liabilities are eating up a bigger share of disposable income. Canada's debt-to-service ratio climbed 14.51% on an adjusted basis in the third quarter, the highest since 2008. The Federal Statistics Agency reported last week. Hoyas Michaelis, which usually accounts for 10% and 50% of insolvencies filings in Ontario, just had its busiest November since opening in 1999. The Insolvency Trustee and Debt Relief Agency received 1,000 new inquiries compared to 650 in November 2017, and initiated 384 new filings, surpassing the previous high of 350 in November 2009. Through the first 10 days of December, Michaelis and the firm's numbers are up 57% from a year earlier. Oh, payday loans, guys. You know things are not good when you got to hit these places up. And you know what it is? It's a lot of families, young men, young women with kids that are hitting this up because they need to eat. And this is how bad it's getting. I've been warning everyone for the last 7-8 years. Okay? You got a lot of Captain Obviouses out there making videos in the last, I don't know, 8 months, a year now. And about this. And where were they 8 years ago? Oh, yo, look at the number of videos I'm putting out. I'm warning, well, no, you should have warned people 7-8 years ago. And the people that did follow me on this channel and listen to what I said, a lot of people have taken my advice. They did not buy. A lot of people did not buy in Sydney. I had one guy get into a divorce in Sydney because he listened to me. And she's like, oh, you're going to listen to some crackpot talking about housing on his phone that can't read? And look where he is now. He didn't buy. She left him. She got a boyfriend. They bought a house together. And now they're underwater, from what he told me. So, you know, yeah, it doesn't take someone that's sending rockets to the moon to figure out what's happening here. And it's been many years I've been doing this. I even lost my first channel for doing this. Had to redo my channel in, was it 2016 or 2015? I had to redo my channel because I lost it because of people, you know, I had a channel during the 2010 Olympics in Vancouver. And I wish I backed it all up. Talking about, you know, housing prices, is it going to crash after the Olympics? And for some reason, because this whole Olympics thing, they just I got up to 13,800, I don't know, around that much subs, and I lost it, you know, because of this. Because all I'm doing is just creating conversation, you know. I don't want to spread fear. I just want to make sure that people make the right decisions in life. The decision's there to make, right? Anyways, payday loans. Lower gasoline prices aren't fully offsetting the higher mortgage costs. Yeah, go figure. And there is a very little room in many Canadians' budget to absorb these increased costs, he said. Adding, he's also seeing more clients with so-called installment loans, basically large, high-interest payday loans that can be paid off over a long period. Martin, whose Vancouver-based firm recorded the biggest year-over-year increase in filings in November since he joined 8 years ago, also cited an increase in the large payday loans among his clients. He said previously it would have been typical to see everyday loans of $500, $1,000, and now sometimes he's seeing installment loans of $15,000? Wow. And you guys know that these payday loans are 100% unsecure, right? So they're unsecure loans, and unsecure loans, basically, you're using your signature as collateral, but you will pay it back. Holy smokes. Okay, higher rates are hitting at the same time when consumers are already struggling to cope with the recent housing boom. Martin says that a majority of clients in his firm's downtown Vancouver office pay 50% of more of their income in rent. Wow. Wow, this is intense, guys. I'm sorry. Wow, 50% of their income in rent. And you can only do that for so long, he said. Other clients are young families who've overexhausted themselves at the peak of the boom, often tapping into home equity to make renovations and now can't sell. Yep. Grant Bazian, president of MNP Lot, said November, the agency's busiest ever, with the year-over-year growth in filings about 12%. For December, it looks like a trend is holding up, putting MNP on pace for the record fourth quarter, he said. The biggest driver of the increase to filings appears to be rising interest rates, Bazian said by phone to Vancouver. People just get in over their heads. The Bank of Canada has raised rates 5 times since mid-2017. Remember when I was making videos in 2016, I kept telling guys they're going to have to raise interest rates. They're going to have to stimulate or fix the economy somehow. They can't go on recordly historical low interest rates for much longer. We haven't tested this before. We don't know where it's going to go, you know? Now, they made it as long and low as possible without testing it in the 30s or 1940s or 1950s to see what would happen. Because record low interest rates in those times was 5-6%. That's record low. Now it's like 1%, 1.5%. Investors increasingly sure the bank will proceed more slowly, and implying odds showing one more increase over the 12 months in October. The expectation was for 3 more. David Lewis, an Edmonton-based board member of the Canadian Association of Insolvency and Restructuring Professionals, which represent about 1,000 insolvency professionals, said higher borrowing costs are already having an impact. And guys, it's like 0.25%. Holy smokes! 0.5%! Holy smokes! What if they went back to the 80s, 17%? Jeez, Louise! Most of our membership believe that it's not a blip, that we will see an uptick in numbers just because the interest rate's rising, he said in a phone interview. People are finding they can't deal with debt month to month. They could have dealt with 6 or 8 months ago, because they were paying because they're paying extra interest on it all. So remember, when you have a blended interest rate, you have your Sears card, your Bay card, your the Brick card, and all these Capital ones, you're paying a blended interest rate. And when you're paying this blended interest rate, I think they had an app, they had a website that calculated your blended interest rate and what you're actually paying in the end. It spits out one number. And it used to be a big blender on the page. And on the left side, you put in all your credit cards and how much you're paying on each one. And then, basically, the blender would take the blended interest rate and give you a total of what you're paying. And what you're paying on a revolving rate. And what you're paying separately on an installment rate and interest. So, this is really bad, guys. I've been talking about this for many years now. And I've been warning people many years now. But you got all these... whatchamacallits, you know, Captain Obvious is coming in now and making it so, you know what I'm saying? You know, like there's some channels I saw that are 3 months old, and it's like, really? You know, and then there's channels that I saw that were bashing me and bashing others that were coming out and talking about this for a long time now, bashing us, and then saying that, and then now they're back saying, oh yeah, and then they're just copying and mirroring our material. It's like, you know what? Like, get your own, like, a lot of people are on YouTube to make money, and that's all they care about. And I'm on YouTube to grow a nice platform, a nice strong platform, and have guests on from all over the world. You know, Mike and the Night Guys, join me, Yellow Vests, what's going on? We need to get down to the bottom of the Yellow Vests, because the Yellow Vests basically is the aftermath of what happened 10 years ago with the conversion, illegally converted interest rates that we were getting in our bank accounts into some sort of an illegal conversion the banks did to pay off and bail out all the lenders. Let me know what you guys think. Comment below. I'd like to know. Why are we on the hook for everything? Why is the menial taxpayer, the common citizen that pays his taxes, why are they on the hook for all the bank's problems? So, Yellow Vest Movement, we're going to be talking about it. So if you're in the Yellow Vest Movement, please add me on Skype, Mike Martins 1980. I would like to know what is going on. I had someone from France that was participating in the movement, but unfortunately, he doesn't want to come on the show because he's scared. So I don't blame him. That's fine. Let me know what's going on in your neck of the woods, whether you're in New Zealand, Australia, wherever you are. What is happening? Why is this happening? And we'll get to the bottom of it. Let me know what you guys think. Comment below. Thanks for watching.